as a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Pascal Soriot has an unparalleled insight into fighting the coronavirus pandemic as chief executive of pharmaceutical giant AstraZeneca. We discuss the challenges posed by vaccine disinformation, making drugs sustainably, and what COVID-19 could mean for us in the years to come. Will we need yearly booster shots to deal with the pandemic? I know, again, it's still early days, but how do you see this panning out over the next 4, 5, 10 years?
I think it's likely that this pandemic will be endemic over time. I mean, it is already more or less endemic in some geographies in the world, which means it will be like the flu. It will come back on a regular basis, and people may have to be vaccinated. Now, the question is, do you need to be vaccinated every year, every 2 years? We don't know that, and it will depend on the durability of these vaccines. So again, that's why we need more data, more follow-up. And collecting data is absolutely fundamental, because right now we are in the urgency of the moment, which is to stop this pandemic from spreading. But we also have to think about how we're going to live with this virus being endemic, like the flu is. And therefore, how often do we vaccinate people? Only time and data will tell us that.
Is that why you've recently also changed this, for-profit model? And would it have been wiser to wait for the WHO to call it an endemic instead of a pandemic?
Well, you have to think about the fact that the for-profit approach, which, by the way, as a reminder, is always going to be a modest profit, applies to new orders. So the new orders will be delivered mostly next year. So we are really talking about next year. Now, next year, hopefully, we will have, as a society globally, made even more progress in terms of vaccinating people. So that's the environment that you have to consider this decision, number one. Number two, our price will always be quite reasonable. So it will go from no profit for some countries to some profit for others that have more ability to pay. But we will always look for modest profitability, because at the end of the day, our company is about cancer, it's about cardiovascular disease, respiratory disease, rare diseases. And we will never look to make enormous profits out of this vaccine.
Pascal, whose job is it to fight misinformation about vaccines or drug companies in general?
Well, we have a team of people who are constantly looking at, what is being said about vaccines and other products, but mostly vaccines, of course. And there has been a lot of misinformation in the world, in social media in particular, about vaccines. Unfortunately, this sometimes influences people. You have to really keep in mind, vaccination is the first line of defense. And at the end of the day, whichever vaccine you take is going to be better than no vaccination. And you have multiple different vaccines around the world that are available to people. And it's unfortunate that this misinformation is actually creating anxiety and creating doubts in people's mind. And we try to correct this misinformation where we can, but I have to say, there's so much going on in social media that it's often difficult to cope with it all. Yeah.
I mean, are you lobbying technological companies like social media companies to do more in that fight, which is, I guess, your fight with the regulator and also politicians?
What we would try to do is make sure that people stay true to the facts and the science and correct any misinformation that is put out there, and then try to stop people from spreading incorrect information. But again, as I said, it's very difficult because it is happening so much in social media across the world. You really find it difficult to control it, to not control, but to correct everything. At the end of the day, I think you also have to rely on positive information, correct information that governments and experts can actually bring to the public to give them the right information to make decisions for themselves.
Pascal, we also had a good conversation, of course, at Glasgow COP26. Are you making or anticipating making any changes to some of your drug developments or how you distribute drugs to be more environmentally friendly?
Yeah, absolutely. As I said before, you know, some of the societal priorities are really critical, not only because as a company you need to do the right thing and contribute to sustainable development of the world, but also because if you want to bring your team with you, you have to address some of these issues that are critical to them. And sustainability, climate change is one of those. So we committed to be carbon neutral by 2025 for our own operations and carbon negative by 2030 for the totality of our supply chain. And the supply chain part is the most challenging part because we have good plans in place to be carbon neutral by 2025 for our own operations. The site in Cambridge, the R&D site we're opening, is a good example of a sustainable site. The most challenging piece is the totality of the supply chain. And so we are engaging with other companies in industry to collaborate, to work with our suppliers, to work together to help them reduce their carbon footprint so we can achieve our goals. And, you know, this is something that the sustainable market initiatives of the Prince Charles can really help us achieve, bringing companies across the industry and the healthcare system as a whole together to collaborate to impact our carbon emissions.
Up next, showing leadership under pressure. From fending off takeover bids to navigating political firestorms, Pascal Soriot takes us inside some of the key challenges in his time in charge of AstraZeneca.
I'm suddenly used to having to compete and fight for what you believe in. That drives my focus on performance. I'm used to setbacks, I'm used to challenges, and that's a spirit I always try to instill in the organization.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Pascal Soriot's tenure as chief executive of one of the world's largest pharmaceutical companies has been anything but simple. During his decade in charge of AstraZeneca, he's fended off a takeover bid from Pfizer, secured the largest deal in the company's history with a $39 billion purchase of Alexion, and faced a rocky road to produce a coronavirus vaccine. We discussed how he navigated these challenges and the role his leadership style played. Pascal, you've been in charge of AstraZeneca more or less over a decade, and you've transformed the company. You've also had to fend off, the approach by Pfizer. How does the pandemic compare to that?
Yes, I've been used to challenges and setbacks and success, of course, over the years. And we've had, as a company, we've had many more successes than we have had setbacks. But we did have setbacks across our pipeline developing new products. A few years ago, we had a large study that was very important that failed, and our share price suffered from it. So, it's never a straightforward journey in our industry. So certainly the approach by Pfizer many years ago was something that pressure tested the organization and us as a management team. The COVID vaccine, the COVID pandemic tested us. But at the end of the day, I think it was really a positive for our organization. First of all, because everybody is very proud of the difference we've made globally. Again, more than 2 billion doses of vaccine, 30% of global supply, or close to 30%. Secondly, it really tested us as an organization, and it showed the commitment of our people, the resilience of our people. And in our industry, you have to be resilient. You have to innovate, but you also have to be resilient. Sometimes your idea doesn't work the first time around, and you have to keep going. So it really tested the resilience of the organization, and it really reinforced the team spirit across the company. So, of course, it was sometimes a little bit stressful, but overall, it really helped us as an organization mature and grow and become even stronger.
Pascal, how would you describe your leadership style? So I know you've talked in the past about, growing up in the outskirts of Paris. Are you a fighter? Well, I am certainly used to having to stand up for what you believe in, and in quote-unquote fighting for your ideas, and driving change is not always simple. So I'm certainly used to having to compete and fight for what you believe on, and really that drives my focus on performance. Nothing really came easy to me in my life, so I'm used to setbacks, I'm used to challenges, and that's a spirit I always try to instill in the organization, which is we have to perform, we have to drive innovation, we have to be resilient, we have to accept challenges and setbacks, and we have to stay focused on the goal. The goal is to come up with new medicines that make a difference to patients. It's very simple. And then through this journey, we will have ups and downs, and we just have to take it as it comes and keep pushing. How would you describe, Pascal, your leadership style? And actually, is it different being a leader in 2022 to when it was like in 2012? Yes, absolutely. I mean, it changes constantly. Society changes, people's expectations change. What worked 15, 20 years ago may not work today. Technology changes, and it has an impact on society and the way we operate. But I think what always works is really trying to inspire people for a common goal, developing a shared purpose. People are never so excited and committed as when they share a common purpose. And our purpose is really to follow the science, do what's right for patients, and then build a portfolio of medicines that will change the practice of the treatment of cancer, cardiovascular disease, respiratory disease, and also today rare diseases. So that's what I try to do, to build a shared purpose and a common goal, and then bring to people what they need actually to succeed, the tools they need, the cultural environment they need. And these days, different things are important to people. I mean, diversity, for instance, has always been important, but it's never been as important as today. People are realizing the importance of working in a diverse organization. Sustainability, climate change is becoming critically important to people, especially young people. So if as a company you don't
commit to some of those important priorities for the world, then you don't bring people with you.
Pascal, Prince Charles has opened your new £1 billion research and development facility in the UK. What looks most promising in the pipeline? What are you most hopeful on?
Sometimes people ask me that question, and it's always like choosing between your kids. I mean, which one do you prefer? I like all our products. We have a tremendous lineup of new products that treat cancer. Of course, recently we had absolutely tremendous results in breast cancer with a new product. We are developing a so-called antibody-drug conjugate that really delivered amazing results in the treatment of HER2 breast cancer. We also have had results in kidney disease, heart disease. We've also had other results in liver cancer, biliary tract cancer, which are cancers that haven't seen much progress in the last few years. We've had results in the treatment of Wilson disease, a rare disease which is an accumulation of copper in the body. So we've had results across a whole range of conditions, and we continue building the pipeline. And here in Cambridge, we are at the heart of science, really, in the Cambridge community, and we have tremendous technologies to develop new products for the future.
Pascal, in the 10 years you've been in charge, what do you still like most about your job?
Learning every day, discovering new things. Science is the most exciting thing you can imagine. And as I said a minute ago, the development and the progress of science, in the last few years has been incredible. And in fact, you cannot know everything, and even though you stay curious and you try to learn, it's moving so fast. So, learning is the most exciting, and making an impact. When you get results like we got recently for the treatment of breast cancer, liver cancer, Wilson disease, kidney disease, and you are helping patients and making a huge difference, that is definitely very exciting. And, it's hard to be bored in our industry, trust me.
Yeah, I'm sure. What do you like least about your job, then?
There's not much I don't like in my job. I try to keep the administrative part as little as possible. But of course, there are some dimensions to this job that have to be considered as well. But I try to stay focused on what matters. And what matters is science, developing new products, meeting people, recruiting tremendous scientists, talented people across not only R&D, but also our commercial teams, our manufacturing teams, and staying close to where the action is taking place. That's the only way, I think, to run a company, and that's the best way to remain excited and suddenly making a difference.
Pascal Soriot, thank you so much for joining us today.
Thank you, Francine. It was a great pleasure to be with you today.
Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
The U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
From New York City.
We're here in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
I think alternatives will continue to be a viable investment. This is the most amazing job that exists. I know you think your job is great. My job is far better.
Kim Lou took a long journey just to get back to where she started.
I was born here in Harlem, so it feels like I've come home.
The recently appointed head of Columbia's $13.5 billion endowment was born roughly a mile from the school's campus, but few people in her neighborhood aspired to the Ivy League.
I didn't just grow up in the Bronx. I grew up in the housing projects in the Bronx, and there was very few people that went to college, let alone go to a college like Penn.
From Penn, Kim headed to Wall Street, then Harvard Business School, and eventually landed at the Ford Foundation.
To say she is a trailblazer is an understatement. Kim Lou has worked in a field that has had very few women and even fewer African-American women.
Kim's career took off when she went to the Carnegie Corporation, where she rose to become the CIO of its $3.5 billion endowment.
I wasn't surprised by Kim's success. Kim was destined to be a leader, to be great, because she works hard.
Now at Columbia, she has her work cut out for her. In recent years, the school's investment office has lagged its Ivy League peers.
We're going to run through that wall, and we're going to set this institution up for the long term.
We're on the campus of Columbia University with Kim Lou, who is the relatively new Chief Executive Officer of the Columbia Investment Management Company. Thank you very much for being with us.
Thank you for having me. It's a pleasure.
Now, why do universities have such big endowments? They all seem to be bigger and bigger than they used to be 20, 30 years ago. Why do universities need these big endowments?
Well, you know, the university's endowments are used both to fund issues that are occurring today and students today, as well as the future, and the number of different types of activities and a number of different types of research they are trying to support. Those issues are growing every day. For instance, Columbia University is trying to tackle the climate issue, no small endeavor. So they have a lot of research behind that, as well as a number of students that they need to support in order to find the solutions to these big, massive problems. And so the endowments grow to support the needs to solve some of these big problems and to educate the students that are going to be the leaders of tomorrow.
Now, typically, a university takes a certain percentage each year out of the endowment to pay for operating costs. It's maybe around 4 to 6%, somewhere in that range, and that's what Columbia does?
Yes.
So you need to make at least each year, I guess, at least 4 to 6% or whatever your ratio is. Is that how you operate, to make sure you have at least that amount?
Yeah, you know, the universities, when we think about ourselves, we think about what the payout is, and the board determines what the payout is. We are not involved in that. But when I think about what is important for me to be successful in my job, is that I want to make sure I can get that payout plus whatever inflation exists, because to pay for that same student a year from now will be more expensive than it was to pay for them this year.
Your job is to make certain that the rates of return are as high as realistically they can be. And the rates of return have been very good for all university endowments recently. Is that because the investment managers are so smart, or the markets have been pretty good?
It's a combination. I mean, we hope that we are picking managers that are particularly smart and doing even better than the markets, but the markets have been strong. And it has a lot to do, I think, with both a function of the fact that there's so much technology that makes it more efficient to do a lot of things, and introduces a lot of new ideas and a lot of new opportunities. But on top of that, you know, all of these things are relative investment decisions, right? And so there was a time when people were making absolute decisions and the option of investing in bonds existed, but now everyone's looking for equity options in order to meet their returns. And so they're making a lot of relative decisions about the best places to put their money. And so that means all the good ideas get bid up. And so there's just a lot of money out there managed by institutions who have high return hurdles that are looking to invest. And so you see some of the best ideas getting more and more.
Well, they think they can open up an account at a brokerage firm, then they can buy and sell stocks and do as well as anyone else. They can trade. And I think that's a fallacy. I think that, you know, just like I wouldn't want to fly an airplane or be a dentist or even cut my hair with what I have left of it, I think that people have, you know, an understanding that they can buy and sell stocks just because they can pick up a phone and do it, and they can't.
Okay, and if you were to advise somebody today about the opportunities to invest, generally you would say public equities are good places to invest? For long term, but just invest the same every year. So don't think about it as this is an investment I'm going to make. You should think about for the security of my family and myself, I should invest. Is there something you would tell somebody not to invest in? Is there something you'd say, please don't invest in area A or area B or commodity A or commodity B? Is there something you think is a big mistake to invest in? It sounds like crypto is one of them.
Well, I'm not investing in crypto, but that doesn't mean it's not a good idea. I mean, there's really smart people who have big investments in crypto. I study it periodically, and I choose not to because it's a commodity. And so I'm not interested in investing in commodities. I'm interested in investing in businesses that grow. Businesses that grow, great people, competitively advantaged, and for the long term. And most people think that because they get a check in the mail and they can take that money and open up an account and buy and sell stocks, and it's like gambling. I don't regard investing as gambling. I regard it as trying to take care of you and your family for the long term, and you do it by investing similar amounts for a long time and living to be old, and then you get to be rich.
Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Deflation is a terrible thing. Inflation you could tolerate.
You could trade anything as a trend fall.
When you think about Bitcoin, I don't think it's a currency. I think it's a commodity.
Today, we're in an everything bubble.
I'm Eric Schatzker, and welcome to an encore edition of Bloomberg's Front Row. Jeremy Grantham has been investing for a half-century and calling bubbles for almost as long. He's a living legend in financial markets. A year ago, Jeremy predicted the pandemic rally would end with a historic crash. Here's what he told me.
When you have reached this level of obvious super enthusiasm, the bubble has always, without exception, broken in the next few months, not a few years.
Things didn't play out that way. In fact, the S&P 500 gained almost 27%. So I had to check in with Jeremy again. Had he changed his mind? Not one bit. Jeremy says U.S. stocks are in a super bubble, only the fourth of the past century.
Super bubbles can really wipe you out, like 1929 did. And that's where we are now.
As you might imagine, I had a few urgent questions for the co-founder of Boston's GMO. What should investors do now? How worried is he about inflation? Can Fed policy cushion the blow? Is he still a crypto skeptic? Here's my conversation with Jeremy Grantham. Jeremy, a year ago, you predicted an epic collapse in stock prices, and you told me it would rival the 1929 crash and the dot-com bust of 2000-2001. Were you wrong?
No, I don't think so. I noticed, reviewing it last night, that there was one little element of contradiction. At one stage I said, you can't call these events to within a few months. And at another point I said, history says that when you reach this level of craziness, the market tends to break within a few months rather than a few years. And I think, with hindsight, the market started to get distinctly weaker about 10 months after we talked. So that's a few months, plus a little bit.
All the same, 2021 was a great year for stocks. If I'm not mistaken, the 7th best in a half century.
And this has been exactly how the great bubbles have broken. The blue chips, the S&P 500, have kept strong right up to the last second, and wave after wave of the stocks that had made the real running peel off and drop. In 1929, the flakes were down for the year before the market broke. They were down 30%. The year before, they'd been up 85. They had crushed the market. The really classic example of this is the Russell 2000, which is stock number 1,001 to 3,000. They're multi-billion-dollar companies. They're a serious enterprise. In the last year, they are down. They have not made any money at all. The S&P's made 23%. The Russell 2000 is meant to go up about 1.2 times the market. In a bull market like you're saying there was, it should have been up about 30%. it wasn't even up recently.
So,
This is a huge divergence of a kind that has never happened other than the super bubbles of 1929 and 2000. 2000, you may remember, the growth stocks peeled off and were down 50%. The S&P was flat, which meant the remaining 70% had risen 20%. This is an enormous divergence, and it happens on the upside for the blue chips. So this is it's almost eerily classic.
it's a pattern.
It's a pattern. It's a very rare pattern. And we have been checking off this list all year. When I sat down a year ago, we had seen the accelerating phase that you need in a bubble. That had taken place last year with the NASDAQ up over 100 from the low, but also up 58% from December of 2019. So even granted that COVID decline, it was a hell of a year. It was a year of acceleration. And the NASDAQ has started to weaken relative to the blue chips. The Russell has started to weaken much more so even than NASDAQ.
At the risk of putting words in your mouth, you are as certain as you were then, if not more?
I would say clearly more. I did freely admit, not in our conversation, but elsewhere, that I wasn't quite as certain about this bubble a year ago as I had been about the tech bubble of 2000, or as I had been in Japan, or as I had been in the housing bubble of 2007. I used to think then in terms of near certainties. This time I felt highly likely, but perhaps not nearly certain. Today, I feel it is just about nearly certain now.
The hallmark of a bubble is what you have termed crazy behavior. What would you point to today, right now, as further evidence of crazy behavior?
I think the crazy behavior, the peak of crazy behavior is behind us. I really do. I think we're now in the buy the dip mode, which the super bubbles specialize in. You don't have 2 years of buying frenzy dying overnight, typically. So even in 1929, you had some magnificent rallies. And buy the dip is the watchword of practically every brokerage house out there. And it always is. You never, almost never, have a major brokerage house say, the game's over, guys, duck. It doesn't happen. The commercial imperative is overwhelming to stay bullish. It's how you make money.
If you're right, and stocks are in a multi-sigma deviation from the statistical trend, tell me what happens. The S&P 500 peaked at almost 4,800 points. Where does it bottom?
The trend line, being slightly generous, is 2,500. And most of the great bubbles, the super bubbles, go below trend and stay there for quite a while. In the Greenspan era, that tendency stopped. In 2000, yes, the NASDAQ came down 82%, which was fairly brutal. Amazon came down 92%. But the Federal Reserve raced to the rescue so loudly and strongly that they stopped the decline in the S&P at trend line. It only declined 50%. 50% is a hell of a big decline, but it was only enough to get it back then to trend. This time trend is at most 2,500. And I would expect, even if the Federal Reserve tries to do the same, it will be hard to prevent the market from declining to that level.
So we're talking about a decline of, certainly from the peak, of almost 50%.
Almost 50%. And of course, it declined very quickly 50% in 1929. It declined 50% in 3 years in 2000. And the housing market, which was another great American super bubble, went all the way back to trend in 3 years.
Jeremy, it's one thing to predict a collapse in stock prices. It's another altogether to tell investors they should sell. Should they?
As I said a year ago, I think they'll do pretty well by selling. I'm sympathetic to how difficult it is to get out entirely out of equities. And I would point out, as I did last year, that there are less overpriced parts of the equity market around the world. In fact, everywhere is less overpriced than the US. The US is the peak of this bubble as it was in 2000. And what it meant then is what it will mean today, and that is the US will decline a whole lot more than the rest. It's also true that the value end of the spectrum, as opposed to the growth end, is about as cheap as it gets. So if you can combine those by buying value stocks outside the US, I would say particularly emerging markets, but there's quite a few countries, Japan, the UK, where the markets are. If they're overpriced, they're only moderately overpriced. The US is not moderately overpriced. It is shockingly overpriced. We've had a very, very abnormal honeymoon Goldilocks period for 20 years, which I think is ending.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
You and I have talked about the perils of shorting single-name stocks.
Oh,
it's dangerous business. But given where things are and your level of certainty, would you short an index? Would you short tech stocks? Would you short the S&P 500?
Personally, as opposed to GMO, in the foundation we have for the protection of the environment, we are indeed short a decent amount of Russell 2000s. So we haven't been hurt in the last year, which is amazing. We're also short about half as much again as in the NASDAQ, which did hurt us, but not sensationally. And the point there is a lot of our money is in venture capital. That's very growthy. We need some hedging. And if we weren't exposed to a large amount of growth stocks, I suspect we would skip the hedging. We would skip going short. In any case, I would never short an individual name. I would only short a broad index. And the indices I would short, if I was up for that, would be the Russell 2000, because they have a high density of flaky companies that aren't making any money, and the NASDAQ, which also has a high percentage of companies not making any earnings at all. What makes the NASDAQ more complicated is that it has these remarkable FANG stocks in it. And that makes life complicated.
You say that the bubble you described back in January of 2021 has further inflated into a super bubble. And I'm curious to know, I think others would be too, what's the difference between a standard bubble and a super bubble?
A standard bubble we defined over 20 years, perhaps 25 years ago, as a 2 sigma statistical event. It's just a measure of how much of an outlier you are. So you have a historical
deviation from trend.
Yeah, you have a price series of the S&P. You can calculate a trend. Statistics 101 is not difficult, and you can work out how far away from trend you are. And a 2 sigma is the kind of deviation that should occur every 44 years. And because we're a little wilder and less efficient than we should be, it occurs every 35 years. It's not bad.
We meaning human beings, as a species.
As a species. Every 35 years. It was a little closer than I expected back then. But every 35 years feels about right. 1 a career, twice a lifetime. That feels like a pretty decent definition of a bubble. And a 3 sigma should occur every 100 years. Now we, as I like to say, we do crazy pretty well as a species. So they occur much more, 2 or 3 times more often than they should. They're out of kilter much more than 2 sigma. So 2 sigma, you can have some fairly standard bubbles. They give you a certain amount of pain, 30, 40, 50% pain. Super bubbles can really wipe you out like 1929 did. And that's where we are now. We entered a few months ago into 3 sigma territory, super bubble territory. And the other great risk is last year we also entered bubbles in real estate. So this is a very dangerous year that we've just had.
For years, investors have taken comfort in the notion of an implicit put. Anytime the market stumbled, the Fed would effectively bail it out with a rate cut or, more recently, by injecting liquidity. The Greenspan put became the Bernanke put, which became the Yellen put, and finally, the Powell put. Does inflation and the handcuffs that it puts on monetary policy eliminate that implied option?
It complicates it. And yes, it limits it. It probably does not remove it.
Because of inflation?
Yeah, and because of low rates. And now, you don't have the tools that Greenspan had. Bernanke was more limited. He needed a lot of help from Treasury, from government spending. And what about now? Now, you have a much higher ratio of debt to GDP. You have much more debt on the balance sheet of the Federal Reserve, and you have much lower rates. They will try. They will have some effect. There's some element of the put left. It is just heavily compromised, as you suggest.
How worried are you about inflation?
I haven't written about inflation for 20 years. When I did quarterly letters, I never featured inflation. I didn't think it was on the radar screen. It is now on the radar screen once again. It's not that inflation will go roaring back to 1972 or 1982. It's that it will always be part of the discussion from now on, in my opinion. Instead of forgetting about it, it will be spiking and irritating and falling back and then spiking again. It will be part of the scenery in the way it used to be in the second half of the 20th century. There's a lot about this economy, I think, that will be dragged back into the late 20th century. We've had a very, very abnormal honeymoon Goldilocks period for 20 years, which I think is ending. Let me put it this way. We're in the early stages of running out of raw materials. Of course, we live on a finite planet. There's only a certain amount of cheap oil, cheap nickel, cheap copper, and we're beginning to hit some of those boundaries. And we're going to have bottlenecks here, there, and everywhere. The food price index of the UN is about as high as it gets. Growing food is not getting easier. Climate change is coming with heavy floods, serious droughts, and higher temperatures. None of these make farming easier. So we're going to live in a world of bottlenecks and shortages and price spikes, and we have to get used to it and learn to manage our way around it. The question is there a technology that will turn out to be very useful, whether done by corporations and governments and everybody else? I am sure the answer is yes.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
The Federal Reserve is confident that it can contain inflation with a series of incremental rate hikes. What do you think it'll take?
I think the Fed absolutely does not get the pain that's involved with a bubble breaking. You can see that in the history of the last 50 years. Greenspan encouraged the tech bubble. He bragged about the productivity gains from the internet that would last forever. Actually, productivity has declined slowly but surely since then. When it broke, it caused a lot of pain. Bernanke learned nothing. He encouraged the housing bubble. He denied its existence, even though it was a 3 sigma, 1 in a 100-year event that had never occurred in American history before. And what have we learned? We just went straight back into the game, overstimulating, pushing the rates down, down and down they have gone for 50 years. So they started at 16% on the long bond, and now the real return you would get is -2.
You've been a longtime critic of Alan Greenspan.
That's true.
You're a critic of Ben Bernanke, and I suppose by extension, Janet Yellen too. Do you have any confidence in the current chairman, Jay Powell?
No. No, he hasn't expressed any reservations about the Greenspan, Bernanke, Yellen, Powell policy of pushing rates down. They act as if a low rate is a panacea and comes with no downside. That is clearly nonsense. It's created, I think, the biggest evil in our society, and that is inequality. If you drive up the price of assets systematically, and it's bound to happen if you drive the rates down to negative territory, who do you make money for? You make money for the people with assets. Who owns the assets? The top 1% has 35% of all the assets. The top 10% have practically all the assets. What's the asset ownership of the bottom half? A rounding error, practically none. So you mark up the assets, and that's your contribution to society. What you're doing is pushing down on labor, pushing down on the bottom half, with no offset from increasing their assets, since they have none. And you're making the top 1% ineffably rich. And the data bears that out right down to the last 2 years, when the top 0.1% has doubled its wealth during COVID. And the bottom 50%, I can assure you, has not doubled its wealth. The dominance of a handful of firms has increased steadily in most subsets. And so profit margins have gone up, and the power of corporations has gone up, and they've been able to use more of their power in influencing government, and they have. There is a lot of regulatory capture where people from business tend to run the agencies that regulate the industries. So it's been a wonderful time to make money at the corporate system, and the share of GDP that goes to corporate profits has steadily risen, and the share going to labor has steadily fallen. This makes it a dreadful cousin with the asset class inflation that we've had. They both have two things in common. They make the rich better off, and they make the working class worse off. And that I think is the great poison at the moment in the American system. If we do not address rising inequality, we will be in real trouble.
Jeremy, I'm curious to know if in the 12 months since we last spoke, you've changed your view on cryptocurrencies.
I have spent a lot of time in the last year on cryptocurrencies. They may not be good for buying groceries. They may not be a store of value. They may be highly correlated with the speculative stocks. They may have come down 40, 50% like the SPACs, but they do something way over my head to understand.
Do you buy the argument that there is an important difference between Bitcoin on the one hand and at least a couple of other cryptocurrencies on the other? And I'll name them. Ethereum, that's a blockchain. Ether is the coin. And Solana. And the difference, and I'll do my best to articulate it, is that those other blockchains are actually building blocks for new businesses that will prove to be revolutionary because they will eliminate things or help to eliminate things that I suspect you don't like. Transactional friction in the banking system and rent-taking that remains embedded in legacy financial institutions.
So the question is there a technology, blockchain, that will turn out to be very useful, whether done by corporations and governments and everybody else? I am sure the answer is yes. There's a useful technology, et cetera, et cetera. Does this justify trillions of dollars of perceived wealth? No, it doesn't.
It might amount to trillions of dollars of wealth, eventually.
If they can find a usefulness for it when it's integrated into the economy, it will perhaps facilitate productivity, like many ideas do. Very few ideas of that kind floated around and were capitalized at trillions of dollars, even though they had an enormous impact on the economy. Blockchain should be like one of those.
I thank you again. Great to speak with you.
Yes, it's a pleasure.
Pleasure's mine.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Thank you so much for having us. So do you have a direct line to the president now?
Well, he's enthusiastic. You know, obviously the project is significant and a lot of interest around it. But you know, it's also, he says, hey, I really want your views. You know, I want your views on the semiconductor industry, on the shortage. You know, how to be you know, more effective partner with business, some of the geopolitical topics. So we have a date planned to get together again.
When you talk to him, do you feel like he learned something? Like, what did he take away from the conversation?
Yeah, you know, I gave him a 20-minute briefing. You know, and some have said, you know, how there is he? But he was engaged. He was asking questions, seeking to understand, excited about the benefits to the region. And I'll tell you, Emily, this idea of the Silicon Heartland, it just pulled on something deeper in the nation. And, you know, right, you know, the plans have sort of been under work, and all of a sudden, you know, hey, you know, let's get this announced, and what a kick in the pants for the CHIPS Act.
Intel CEO Pat Gelsinger leaning in with President Biden at the White House, unveiling a plan to invest tens of billions of dollars in the American heartland of Ohio, create thousands of jobs, and bring chip manufacturing back to U.S. soil. It's part of an ambitious effort to revitalize a lagging company and wrest control of an industry from Asia. The question remains, will it work? Joining me on this edition of Bloomberg Studio 1.0, Intel CEO Pat Gelsinger.
Pat, so good to be here with you.
It's always a joy, Emily, to be with you. Thank you for having me.
And here at the Intel Museum, which is obviously a sign of the legacy, which you were part of, because you worked here for 30 years before you left.
Yeah, 30 years, you know, an 11-year vacation, and then now back for just about a year.
So tell me about that call when you got asked to come back as CEO. We're coming up on the 1-year anniversary.
It was right before Thanksgiving, a year plus ago, and the request was, would you consider joining the board? So I asked Michael, right? Hey, Michael, what do you think? Right? He says, hey, they need help, go help them. And yeah, you know, that Michael. And yeah, the VMware board was okay. Yeah, you know, if Michael's supporting it, we're okay with that. So I interviewed to join the board for the month of December. They said, would you consider being the CEO? So it just ruined my Christmas season last year. You know, our 8th grandchild was on the way, and you know, the VMware gig, and I wanted to get the public offering of VMware done and everything. So it was sort of like, wow, or wow. And, you know, how was that going to play? So 3 weeks of chaos, and then obviously the January 15th announcement, you know, and the idea of coming home, you know, being a successful CEO, coming back now to the company that I was born and raised in, as I like to say. I went through puberty here. I started so young. And now the opportunity to lead and really help the resurgence and reestablishment of this iconic company. It really is the honor of a lifetime.
What was it like to return to a company that has so much history, which you were part of, but also knowing you needed to shake things up?
The first staff meeting, February 15th, they usually started at 9. I started the first one at 7 a.m. And the first bullet of the first slide, we will have a torrid pace. Right, just setting the
torrid.
Yeah, it's a new word in the Intel vocabulary. The industry is moving rapidly, massive shortages. The competitors are performing well. Hey, what we've been doing ain't working, team. We have to set a new course for the future, and that's gotten underway very rapidly. And we've gotten a lot done over the first year, but you don't change, you don't fix, you don't reestablish after a decade of bad decisions and poor execution. It's going to take a while, but we're well on our way after year one.
You took the job in the middle of a pandemic, in the middle of a supply crisis, two themes that are still with us today. If you could give yourself an honest one-year report card, what would it say? Give yourself a grade.
Well, let me give you 2 grades. The board gives me an A. I give myself an A-. Right? Now, in some regards, we're ahead of where I thought we'd be. In some areas, we're not as far as I thought we'd be. And it really is more a statement of the massive challenge in front of us. And we still got analysts out here. Some of them piss me off, right? I call them my bears and my perma bears at that sort of say, yeah, it's the right strategy, Pat, but I'm not sure if I need to invest for a year or two, yet. When's it going to start materializing in the marketplace as well? So good progress. It's a good year behind us, and people are really getting excited about the new old Intel.
Do you ever have it out with the perma bears?
Of course. We'll debate on different aspects. And hey, I appreciate divergent views. Yeah. That's part of the Intel culture, right? Andy would argue everything. As I would say, if you were 95% right with Andy, you were wrong.
Well, you know something about hard work because you grew up on a farm. Yeah. Robizonia, Pennsylvania.
Yeah, I say between Reading and Hershey, halfway is Robizonia, and we were 5 miles outside of town. So when you got nowhere, we were 5 more miles.
But tell me about your upbringing. How do you go from farmer in the middle of Pennsylvania to engineer in Silicon Valley?
My dad, number 9 of 10 kids, and Grandpa said, we have enough farms in the family. Just work with your siblings. I'm the oldest boy. Had we had a farm, I'd be the farmer, because that's what the oldest boy does. 16 years old, accidentally took a scholarship exam and won. So I ended up, having the opportunity to go get a technician's degree, community college. And so at 16 years old, skipped my last year and a half of high school, finished my associate's degree, and Intel came interviewing for technicians. So here I am, 18 years old. Intel on the West Coast invites me to come for an interview. I'd never been on an airplane, never been to the West Coast. How long do you think it took for me to say, yes, I'll fly to California, right? It was like 2 nanoseconds, and they offered me a job. And the interviewer said, in the interview, he said, smart, aggressive, arrogant. He'll fit right in.
You actually became the chief architect of the 486 processor? Intel's 486 processor, right?
Yes.
And you had to pitch that to Steve Jobs. I want to hear about that meeting.
Jobs and Andy, they had argued early, and Jobs went off on a different path, right? And because of that, they were using other microprocessors. And so I tried to convince Steve, come back to Intel, right? And I tried to sell him on the 386. He sort of threw us out. I tried to sell him in the 486, and he threw us out at the time. And eventually we won him over with the Centrino product some number of years later. But, it was also his insatiable, detailed demand for engineering and industrial engineering excellence. And to me, that's just what set him apart. Literally, I was nudged out of the company at the time. And I was
nudged out or pushed out?
was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
You became Intel's first CTO. When did you know you wanted to be a CEO, that you wanted something more?
So in my 20s, I had my first patent. I had my first book being written, programming the 83, 86. It was a bestseller, Emily, right? Had, gotten to be a VP of the company, right? At the youngest VP ever. And it was sort of like, okay, what do I want to do next? Right? And then through that was sort of the soul searching time. And I wrote my mission statement that said, become CEO of Intel. And, here I am, 25, 26-year-olds. Well, being CEO, you got to be kidding me, right? What are you talking about?
Gotta have ambition.
But it became this driving force in me that I'd be in meetings with Andy Grove, Bob Noyce. Sort of, I was armchair CEOing for a decade and a half as I'm sitting in the room, with these industry legends. And all the time, it was making me better.
A lot of people thought you would be a shoo-in for the CEO job when that job came open. So why did you leave if this was your dream job?
Yeah, there was a period of time under Odolini's leadership where he had a different view of leadership, different view of what he wanted his successor to look like. And, literally, I was nudged out of the company at the time. And I was heartbroken.
Nudged out or pushed out?
Let's say, somewhere between those two. That 11-year period, by the way, Steve Jobs was outside of Apple for 11 years, right? And there's something about...
Interesting.
Yeah, being away, and I call it the death of a vision, period, where you really have to sort of look and say, okay, why am I pursuing this? Why wasn't I ready for that job? Out of these circumstances, what am I going to learn? I've also seen the VMware and the Dell and the EMC culture up close. I just feel so much more equipped now. And had I stayed on the linear path to CEO, I wouldn't have been the leader that I am today.
So those 8 years as CEO of VMware.
Hugely valuable.
You wouldn't change a thing.
I wouldn't change a thing, right? And I learned the value of software. And hey, Intel's going to do a whole lot more software in the future, I promise you. But it was also a period of personal development as well. Developing humility, confidence, insights on how to be a leader at this scale.
Moore's Law has guided the development of the chip industry for decades. It's not a law per se, but it's been critical to the development of semiconductors.
We might even go super Moore's Law this decade. And, 4 reasons I said was the case. We know how to build transistors that we can see them scale for the next decade. We have power delivery. How do you get the power in and out of the chip with our Power Via technology? Third, we have the lithography. We also see that packaging, we'll call 2.5 and 3D, which is becoming much more like wafer building as we look to the future. So here we are, 100 billion transistor chip will be our largest chip that we do today, our Ponte Vecchio for high performance computing. By the end of the decade, we will deliver the trillion transistor chip. And I just say, with utter confidence, I sit here and say, my team's going to make that happen. So industry, buckle up, hang on, we are going for a ride.
So what happens after a decade? I mean, do you think Moore's Law can continue forever?
To me, Moore's Law has always been about a decade, right? Where we can see in front of us the core technologies, the barriers, we're lining up the things that will allow us to do it. So 5 years from now, we'll have the next interview, Emily, and you'll say, are you still good for a decade? And I hope to be able to answer that question, yes.
So we have a date in 5 years.
There we go, absolutely.
Okay. Your strategy involves doing multiple things that Intel has never been able to pull off before at the same time. Moving into Foundry, for example. Why do all of these things at once?
These are reinforcing strategies. It's not like this one is in conflict or separate from the others, but they are making each other better. And let's talk about the Foundry as an example of that. If I open my Foundry doors up, that means I have customers benchmarking my process technology every day, right? I'm not an internal guy anymore. Instead of just saying, here's my chip, or you can go to external foundries, I'm going to say, let's go together. And we'll bring some of your stuff. We'll optimize some of our stuff. Also some of the new business areas that we're launching. Hey, we've been in internal graphics forever. Now we're going to do discrete graphics. We're going to build on things that we're already doing and doing well.
Now, investors seem to be really excited about the ambition, the speed, the aggression, the torrid pace, if you will, but they're not excited about how much it's going to cost. And they want to know about margins. And I know you've said 5 years. That's when, those historically high margins will return.
That's right. It's going to be at a couple of years of investment. And I am proud of making those investments. We're not being managed on a quarterly Wall Street view, right? We are investing for a long-term return, and I'm pretty darn proud of that.
And you've budgeted up to $28 billion here, but your rival, Samsung, TSMC, they're planning to spend way more than that. So is there a chance this could cost even more than you're planning?
Well, what we've said, $28 billion for this year, and it could go up next year and the year after. This is big business. This is big capital investments. This is big manufacturing expansion. We're pretty proud of the position. And boy, having doubled my capital investments year on year, hey, we're not being bashful about the big steps forward that we're taking. And with the announcements that we've laid out, we believe that we'll be back in fundamental process leadership by 2025.
So I think I saw you wearing a Christmas sweater, taking some shots at Lisa Su and AMD. I believe you said they're already in the rearview mirror. They're never going to be in the windshield again. I asked her about this, and she said, we're playing our own game and we feel good about it. She didn't even say the word Intel. What's your reaction to that?
Well, Lisa's done a good job with AMD as a company. And hey, I think we're back to a leadership position on the client. And server, hey, we got a little bit more work to do in that area.
Is it possible the industry's in an arms race that will lead to spending itself into an oversupply? I mean, that has happened before.
We've looked at this very carefully. And, the digitization of everything. Tell me what aspect of your life, Emily, isn't becoming more digital?
Well, I'm trying to prevent that, but yes, I think it's happening.
And COVID has accelerated that. The industry crossed $500 billion last year, the semiconductor industry overall, and estimates are $1 trillion, a doubling by the end of the decade. At that point, I believe those estimates. It's not that there's not going to be some blips and turns on the way. And the majority of that is driven by leadership process technology, of which only 3 companies can satisfy that need. Intel, Samsung, TSMC. And we are destined to grow faster than the market to accomplish that objective over that time.
CEO of Apple recently said on the earnings call that it's because of the Apple designed chips that more customers are buying Macs. How does it feel if Intel's being designed out?
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Do you feel you're getting as much support as your Asian rivals are getting from their governments?
I think in the past, clearly they've gotten more, right, unquestionably. And I think what we've seen over the last number of months is really that the entire political infrastructure in the U.S. realizes how critical this is. This isn't just any industry, right? This is the heart of what the automotive industry needs, of what the industrial industry needs, of what the medical industry needs, the consumer industry, the cloud industry. Every one of those relies on semiconductors. Yeah. The national security relies on semiconductors. This is a priority for the nation.
Well, speaking of national security, tension between the U.S. and China is escalating daily. The U.S. is your home market. China is your biggest market. Isn't that a risk to Intel's future?
The U.S.-China relationship now very critical. Big market for us, so we're in China, we're navigating that carefully. U.S. Global market, big, important for us. And I'll say, how do you navigate that? Carefully, right? It requires you to be deft, thoughtful, engage with the political leaders, the business leaders on both sides. Definitely consumes a lot of our energy, and we have to navigate it well.
Intel asked suppliers to avoid Xinjiang, an area that the U.S. has accused China of human rights abuses. Huge backlash from China. Intel apologized for the trouble that it caused. Why not stand up to China in that moment, if you believe human rights are at risk?
We don't, source out of Xinjiang. There's no reason for us to be calling one out over any other. We shouldn't be calling out individual things. It's not our job, right, in that respect. We're here to build great chips, and we have a consistent global policy with regard to human rights expectations of our suppliers. And that's what we've reinforced. And, we feel confident that that's the right way to balance the views that we would have across the globe in this regard.
Your customers are starting to make their own silicon. Microsoft, Apple, Amazon, Alphabet. How do you turn back that trend?
These companies are at such scale now, they can say, well, we can hire another 100 engineers. Let's go start a silicon project. And that's part of my foundry strategy as well. That's right. Google, Amazon, Microsoft, do it with us, right? Come and use our foundry. And when you do that, when you show up to use our foundry, right, we're going to allow our IP to be used by your designers, or let's design together, right? And let's bring together your innovations with our innovations and our leading edge process technology and manufacturing capacity. So we are creating better products that meet your unique needs.
Tim Cook, CEO of Apple, recently said on the earnings call that it's because of the Apple design chips that more customers are buying Macs, that Mac sales went up 25% for a year earlier. How does it feel if Intel's being designed out?
Very sad, because, they designed a better chip for their purposes than we were giving to them. So what's my mantra to my team? Design a better chip, right? We have to create products and technologies that Apple says, that's better than I could have done myself.
So you think you can get that business back?
Oh, yeah. If we do what I said, build better chips. Obviously, winning the microprocessor back, they've made those decisions about every decade. So I'm not expecting this. We have a number of years to get our act together at that point.
Back in 2019, you said Bitcoin was bad design, extreme, and climate intolerant. Do you still feel that way?
Indeed, I do. A single ledger entry in Bitcoin consumes enough energy to power your house for almost a day. That's a climate crisis, right, at that point, and the more you use it. So if we produce a technology that consumes that much energy, wow, that's not okay. And then you sort of say most of the uses when I said that were illicit. Now, that doesn't mean it's not a good technology, but we're not using it good yet. Well, Intel's about to bring forward a blockchain chip, that's dramatically better.
What about the metaverse?
How are you going to use the metaverse, right?
I don't know yet. Tell me.
And I do think that there's going to be, a set of, I'll say, business-to-business applications in the metaverse as well as consumer applications. Well, in the consumer applications, the nearest embodiment of that would be advanced gaming. So many of our graphics initiatives and PC initiatives absolutely are going to place us in the metaverse. We're also going to help to build the back-end cloud infrastructure for metaverse.
We're moving into our lightning round. We are going to move at a torrid pace.
Yes.
So these are some rapid-fire questions. Okay. I hear you were a late-night radio DJ. Is that true?
Indeed.
What were you spinning back in the day?
Oh, this was easy listening music.
Can you give us your intro?
This is Pat Gelsinger, WFMZ, Allentown. Good morning to everybody in the Lehigh Valley.
I love it. What's the latest TV show you binged?
We're running out of things to watch for my wife and I, Linda, so it was Alias was our last binge.
Okay, best piece of advice that you would give someone in their 20s?
Relationships more important than results.
Best piece of advice for someone in their 40s?
Mentors.
How much does faith guide your decisions?
Every day, every way. I'm working for something much bigger and more important than just being the CEO of Intel.
Speaking of that, you have how many kids these days?
4 kids,
And
8
how many
grandkids.
Eight
8 grandkids. Woohoo!
And
What
how
a
often are you getting tapped to babysit?
We're with the kids or have the kids most weekends, right? Between 3 different families. My wife, she is like Grammy of the year, if not the century.
How do you do that and be a CEO? 8 grandkids?
Hey, Saturdays, Sundays, we find ways to fit it in. And as I would always say, life doesn't make room for your priorities. You make room for your priorities.
I hear you climb Mount Kilimanjaro to raise money for one of your charities. Do you still give away half of your money?
Going up every year.
Favorite family meal to cook for the kids and the grandkids?
Oh, I'm the grill master. Anything on the grill, and a great steak on the grill, salmon on the grill. We just had ribs on the grill.
I've been waiting for this one. Do you still have the VMware tattoo?
No.
Was that a real tattoo?
No, it was one of those month-long tattoos. My wife said, if it ain't gone before our vacation, I'm ripping it off of your arm.
I love it. Since you said the farthest ahead that you can see is 10 years, take me to 10 years.
We're going to go on a growth journey as a company that is going to establish us as one of the largest companies on the planet. We will become a very substantial provider of foundry services. I said the number 2 company in the industry for foundry, overall major business. We're going to be the unquestioned leader in delivering compute to the planet, including things like AI, graphics, accelerated high-performance computing. We'll be, the company that's creating entire categories like autonomous vehicles. Tesla, Intel, unquestioned.
So it's going to be a tour in 10 years. Are you going to be here in 10 years? Or are you going to be with those 8 grandkids?
When we took the job, we said, this is a 5-year assignment. And it's not that we're done in 5 years, but we knew it wasn't less than 5 years. So we'll see where we are at the 5-year mark and decide how much longer and how much more energy I have. But right now, we're quite enjoying the journey.
All right. Intel CEO Pat Gelsinger, thank you so much for joining us. Fascinating. So much enthusiasm. It's been great to be here.
Thank you, Emily.